let's welcome Atul Chaturvedi, who is the Executive Chairman of Shree Renuka Sugar, to speak us to about how second half is looking like. Mr. Chaturvedi, good to have you here. Varsha here. Well, Mr. Chaturvedi, Q2 was actually seasonally weak that we saw. Now, how are you expecting second half to be when it comes to sugar companies, and what are the growth targets that you have laid out for Shree Renuka Sugar when it comes to H2 FY25?
Varsha, I must actually congratulate you for your wonderful analysis of the sugar sector woes in the first half. In fact, what your analysts have pointed out is absolutely true. The first half we had a lot of headwinds in the sense that the government, because of the Lok Sabha elections and all, had banned the uh, making of ethanol from cane juice as well as be heavy molasses, be heavy cane juice in the month of December of 2023. So that created a lot of headwinds for the sugar sector, which actually got reflected in the first half of this year, this financial year. So the ethanol values and volumes actually suffered big time, as your analyst rightly pointed out, about 28%. And overall, this has impacted the balance sheet of most of the sugar companies. Renuka's balance sheet is not impacted all that much because Renuka has another stream in the sense that we have a refinery also, which ran full blast, and the refining was doing quite all right. So overall, now we feel the second half definitely should be much better because the government post Lok Sabha elections has finally said that cane juice ethanol and B heavy ethanol, which were banned, can be made by the sugar sector, and they've already allocated a lot of cane this ethanol to the sugar sector. In fact, almost something like we are estimating about 3.7 million tons in the first tranche of sugar diversion towards ethanol. And this has already started, and this will start getting reflected in the numbers of the sugar sector. So this process has already started, and we also feel that going forward, maybe in the next week or so, government might actually revise the ethanol prices, because there's no reason whatsoever why maize ethanol should fetch a price of about 71.86 per liter and cane juice ethanol at 65 and be heavy at 60. So there's no logic behind it. So I think the government was waiting for the Maharashtra elections to be over and done with. And now that the elections are over and the new government should be in place in the next couple of days. So I think the decision makers might seriously look at revising the ethanol values, and the other pending demand of the industry is raising of the minimum selling price. So our take is both these demands should be suitably agreed to by the government, and that is positive for the sugar sector per se. Yeah.
Right. So, Mr. Chaturvedi, two things I want to pick up on this front. This is Hira on this side. Overall, if you see in terms of ethanol prices, would it be right to say that a 4 to 6% increase is something that could be on the cards? And if so, by when is the industry expecting the government announcement?
In fact, we were expecting this announcement to come about a fortnight to back, but the Maharashtra elections probably delayed the announcement. So we are expecting that the announcement could come anytime now, maybe in the next 5-7 days. And that is a possibility. And what will be the increment which will come? That's $1 million question. But it is safe to assume that it should be in the region of about 5 to 7% or thereabouts.
7%
so
increase.
This is what we are expecting.
Right, a 5 to 7% increase is what the industry is expecting. What the government comes up with is what we need to see. And secondly, on MSP, what is the quantum that the industry is looking at in terms of the increase?
It's a very interesting question. In fact, The last time when the minimum support price was raised was way back in 2019. And after that, the cane FRP has been jacked up almost more than 34-35%. But the minimum selling price still continues to be at 31 rupees. So there's no logic for keeping it at that level. And the government decision makers are also probably understanding this. Their argument has been that your selling price in any case is higher than MSP. Why are you so worried about that count? But we thought it's important that this process should be institutionalized. So our take is that one of the studies which the National Sugar Cooperative Federation had done was that the sugar cost of producing sugar now is closer to about 42 rupees. So we will wait for the government to see as to what level they would be willing to cede. Our take is it could be anywhere between 38, 39 of thereabouts per kilo. So that is definitely should be on the cards.
Understood. Also, Mr. Chaturvedi, how do you plan to take advantage of potential export opportunities if, government allows sugar exports of around 2 million tons?
At this point of time, we are not penciling in exports at least till February, March, because the government would much rather see how the sugar season pans out and what is the level. Because when it comes to one second, when it comes to deciding on whether to export or not to export, the government will definitely be more concerned with providing sugar at reasonable prices to the domestic consumer. And that is the reason why probably we feel that the decision to review export opening might actually take place closer to end of February or early March, by which time the sugar season would have panned out. So at this point, and as far as Renuka is concerned, so Renuka is definitely an export. We do export, but that is on advanced license basis. We do a value addition of about 15%. So our export from our refinery at Kandla, that continues quite aggressively. So that's not an issue.
Right. Uh, Mr. Chaturvedi, with regards to where crushing is concerned, are you expecting an improvement in the forthcoming sugar season 24-25? Because the crop is expected to be healthy. That's number one. And number two, I think one of your wholly owned subsidiaries has also approved a capex, right, with regards to cane crushing. How is that expected to pan out, and what's the utilization that you're looking at?
No, as far as this next crushing season is concerned, both Maharashtra and Karnataka seem to be having a reasonably good crop. And in fact, the delay in the crushing season probably augurs well for the total sugar recovery as well. So that is positive, and our crushing season has already started, though a bit late. This might spill over into even March or maybe early April as well. So overall, as far as UP is concerned, UP also doesn't seem to be having anything negative about it, though we are hearing some hiccups in terms of a red rot in some areas and maybe lower cane yields compared to what it was last year, but nothing great. So overall, this crushing season should be definitely much better than what it was last year for sure. Yeah.
Okay, and what about the capex that has been approved for the expansion of the cane crushing capacity from 4,000 to 7,000? By when will that be done?
No, in fact, it has already started. And this is largely for our acquisition in Anamika, which is in UP. And that is the reason is that that area is very strong as far as cane availability is concerned. And there's no reason why we should keep it at 4,000. So we are jacking up the capacity to 7,000. and I'm sure we would be in a position to catch the next crushing season. Partly, it will get reflected in this crushing season as well, because this expansion had started a couple of months back. So from 4,000, I'm sure this by the end of this crushing season, we should be at 5,000, and start of next crushing season, we should be at 7,000 plus.
All right.
No issues.
Also, Mr. Chaturvedi, so now because H2 is expected to be better, and you're doing a capex when it comes to growth, and so you're also expanding. Now, I wanted to understand, with the capex that you have, with H2 being good, where you see growth when it comes to FY25, and also for the long-term perspective, maybe for next 2 years.
No, as far as Indian sugar sector per se is concerned, I think most of the headwinds which we have faced in the last 6-8 months, that should be behind us. And ethanol would continue to be a major driver. And what we are also seeing is that the consumer perception about buying loose sugar is also changing. In fact, the consumers post-COVID are much more concerned about buying packed and healthy goods. So in that sense, our thrust on Madhur, which is our flagship sugar brand, would continue, and all these things should augur well. And what I'm also seeing is that overall, a lot of sugar companies are also seriously working on packed sugar. So that should help the bottom lines of sugar companies as well. And ethanol, let's face it, the best ecosystem in place in the country for ethanol is sugar. Because in any case, as far as sugar is concerned, we are surplus in sugar. Maybe that's not the case as far as maize is concerned. So ethanol will always be a driving force for the sugar sector, and we continue to be reasonably gung-ho as far as ethanol is concerned. And given the opportunity, we would definitely be reviewing whether to expand the ethanol capacity in UP as well. We certainly would review and analyze the same, for sure.
Yes, that's something everyone will be watching out for as well. We're completely running out of time. Thank you, Mr. Chaturvedi, for joining us on the show and getting us the view. So that's the management of Shree Renuka. Pretty much gung-ho with regards to where the second half of FY25.